So this video is going to be all about scalping, and it's very easy to show it in hindsight and not that easy to do it in real time, but I'm going to explain to you exactly what I was using on Friday night to catch this little move all the way down here. So the first thing you do is go onto the hour chart and you would mark the order blocks. So an order block is the last push up candle before the market then declines. So this here is a order block, and we know it's a selling order block because it went up as market makers bought and then declined, which means that they were selling in this order block. So we know that that's quite a good selling order block. You don't have to mark the body, you can mark the whole wick, because we're only interested in that order block because we want to see, do we get a reaction at that order block. Now the next order block that I would be looking at is where the market suddenly changes colour in a up move. So you can see here we had what looked like a level of resistance, and then we get this little strange black down candle indicating that that market there was thinking about changing direction. So that's an order block, and also the last order block that we've got is this one here. So the first thing you do is you mark up the order blocks on your chart. And the reason you do that, and you do it on the 1 hour time frame, is because you don't want to be caught selling into an order block, because you might get a reversal at that level. But if we look at the amount of points that are between those order blocks, we can see from here down to here we've got 200 points, and you can see from here down to this order block we've got another 250 points. So you know roughly, once you start leaving an order block behind, that you have a very good potential that you're going down to the next order block. Now I've changed the colour of the blocks just to make them easier to see. What we would have known before this market even started trading, we would have known that this was an order block, we would have known that this was an order block. This one we might not actually have seen, but now that we can see that that's there on the chart, we can actually mark the order block. Now the next thing is we go down to the 15-minute chart, because that's where we're going to create our master reference point. The next thing I'm going to do is put on the first indicator, and this is called Master Trade Hybrid Aligned Super Trend. So we'll just say OK, and you'll see that that pops up very nicely on the chart. So basically what you're looking for is you're looking for a order block such as this one up at the top, or this one that formed down at the bottom, and you want the super trend to actually give you an arrow. And you can see there we've got a green arrow, we've got a green arrow there, and finally we get a red arrow in this order block. So what you're looking for is not just to get a random signal somewhere in a random place on the chart. You're looking for a order block or a liquidity void on the higher time frame, like H1 or H4, and once you've got that, you wait for the indicator to give you the reversal signal. You can see in this case you might have thought that this was a reversal to the downside, and indeed we did get a single arrow there just pushing to the downside, but it was quickly changed and the arrow turned to green and the market went up. So you sometimes do get a signal like that, but we don't worry about that because we're not trading on the 15-minute. We're just letting the 15-minute do its job and telling us when we should actually take a trade. Now the next indicator that we want to put onto the chart is called Extreme Meter Fast RT. So I'm going to put that one on, then I'm going to explain exactly what Extreme Meter Fast RT actually does. Well, it's in the name really. It shows you when the market is meeting an extreme. So an extreme is shown here on the chart with the red histogram, and at that point you should be aware that this market might actually change direction. So as we go up here, you can see we've got red color. We're still outside of the order block, so we wouldn't be doing anything. And we're getting again red histogram candles, more red histogram candles in this area up here, and even more histogram candles here. Now we're in the order block area, and then we get the signal to the downside, so we know that we should be looking for short trades. You can see here at the low we've got histogram candles to the downside as we're coming down, and even more histogram candles, which shows you that this market's reaching an extreme. Now this is an experimental indicator, and I'll likely be doing some more work on it in the future to make it more aggressive in terms of when it changes color. But you know that you should be looking to trade when you get the red candles or when you get the extreme dodge blue candles. Now as you come into an order block, you can ask yourself the question, am I getting to an extreme? And if the answer is, well, I have had dodge blue candles at the low, you know that this is likely an extreme. It's not pinpointing the turn as such, it's actually telling you to be aware that you are at an extreme. If you are also at an order block as well, that's good. And also, if this indicator starts to roll over and give you down signals, we know that at that point there, the market's hit an order block. We are at an extreme area, and we've also got a reversal signal on the 15-minute. Now once we've got all that together, we know that we should be taking short trades. We should be selling this market. If you're setting this up on your chart for the first time, you only have to set it up on the 15-minute chart, and then you just copy the template, because what we're going to do is we're going to put this side by side with a 1-minute time frame, because that's where we'd be scalping. So I'm going to say File, and then I'm going to save this template. So here it says save template, and I'm going to call it Super Scalper. Then hit save. So when we enter, or rather when we open up a new chart, what we will have is we have this template already in place for us. So I've got the 15-minute time frame on my left hand side, and I've got the 1-minute time frame on my right hand side. So you can see that the 15-minute time frame, just around 1945, it signaled that this was a signal to go short. So at that point you would have actually said to yourself, okay, let's go to the minute chart and look for a sell signal. So what you want to see is you want to see a reversal on your 1-minute chart against the higher time frame trend, which is the 15-minute. So at this point here you had the green signal indicating a buy, but of course we're not interested in buys because the larger time frame, the 15-minute, is indicating a sell trade. So here we get an arrow to short, and somewhere around this point you could short at the indicator level. So you're going to short it here, here, or even here. So you would have had maybe quite a few trades on there, 3 or 4 trades, and you would expecting it to be down, certainly to test this level here or go into the half wick. So if you did a trade even from there, you would have had 45 points. Trade from here would have been 53, and a trade from here was 62. So you've had some good money there, and you can bank that. So now what are we waiting for? Well, we're waiting for another green arrow to the upside, and we get one just here. So at that point we're not doing anything. So here we get the red arrow signal. So when we get a pullback to the red line, we're going short again. So here, 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 or here, we could have gone short again. What would have been your target? We can see that lovely little spike wick there, so we would have shorted down here to the spike wick, 25 points, something like that. At this point here, you don't really want to be shorting down in to the end point here. You really want to be shorting, the arrow comes in and you take the first 2 or 3 signals on a touch of the down descending red line. So at this point here we had another signal, arrow comes in, touch the line here, touch the line here, so we would have got 2 nice signals. Not sure what I would have used for a target. I would have maybe looked to my left hand side to see if there was an order block or a liquidity void, but you can see that even if you're going for a very, very modest 20 points, just down to say here, that would have been virtually 20 points down to there, and if you'd held to the whole way down it would have been 40 points. So you're in and out 10, 20, 30 points, something like that. Now you do get a situation where you get a slightly higher retrace. So here we've got a green signal. The market indicated that it was going to go up, but then it failed and we got a red line here. So you might have taken a signal off the red line there or there. Didn't run very far, but you would have been able to get your stops to break even because it did run down for 16 pips. So certainly at 16 pips, at 15 pips, you'll have your stop to break even. Now don't just rely on the indicator, also look to the left hand side. What you see, well, this must be an order block, because this is a push up candle followed by an instant reversal. So that for me is an order block. So any signal that comes in around this area, I'll be looking to short. So we get a red line, red arrow signal rather there, but we don't get any pullbacks to the red line, so I wouldn't necessarily have gone short at that level. Here we've got another one. We get a red arrow, a touch here, opportunities to short. Let's see how many pips you would have made there. That's a very nice 19 pips, 20 pips, something like that. Now, what else is there on this indicator that can actually assist you? Well, if we look down here at the extreme meter is telling you, just like it is on the left hand side, when the market's at an extreme. So when you get a red strong histogram up arrow, or up bar rather, you simply mark that, because usually you're going to get a good run for your money. Now on the opposite side you've got the dodged blue, and that suggests that you've got an extreme to the downside. In fact, I'm going to change that to let's change that to red, so it's very obvious what we've got going on there. So when I change that to red, you can see that the red bars are forming as this market's declining. That means that we've reached an extreme, and at extremes you should be careful, because you're likely to get a retrace in the opposite direction. So the extreme meter will keep you out of trouble, because when you see extreme, you know that this market's likely going to reverse. So if you're trading off the descending red line, you wouldn't necessarily be doing it when you see an extreme histogram, because it means that this move might be running out of steam. So you let it recharge itself by printing a green arrow pushing to the upside. Now this was a trade I actually took. It was really funny, because I saw this extreme to the upside. I saw that we were still under the red declining line, and I knew that this would be a very nice short trade. So as soon as I saw that and a big push down, I knew to be shorting. Now at this point here you've got the extremes to the downside, so I knew that wasn't to be held, and I got out of my position there. But that was a lovely fall to catch. I only got in about there. I think I closed around here, it was about 50 points. But this is how you use it. So at this point here, you know you've gone to an extreme, so you wouldn't necessarily be taking the trades here. You'd be waiting for this market to recharge itself, and you'd be waiting for it to maybe even print a red histogram. So you can see that as we go up again, we get the print of a red histogram. Now at the red histogram you don't necessarily go short. What you wait for is you wait for a red down arrow to tell you that you can start selling, and then you start sniping off the red line. So let me enlarge that, and you'll be able to see that a little bit better. So once you get the red arrow, you don't sell immediately. Wait for a little pullback to the declining red line, and you can go for your 20 or 30 pips. If we'd just gone down to there, that would have been a very nice 20 pip trade. Now be careful, because as the histogram prints, we can see here that we're printing close to an extreme. You can see that dotted line there. It's not red, but it's saying, you know, don't be chasing this move at this level. And indeed it was quite right, because we got another push up, and we got red candles, and we got a red arrow to the downside, which means we could have traded off here, we could have traded off here, and we could have traded off here. So this is how you put it together. And around news, be careful, because news is likely to throw this indicator out. It's simply trading in the direction of the 15-minute trend and using the 1 minute as your entry, and literally trading off those descending red lines. Or if this was a buy trade, we'd be looking to buy off the green line. In fact, I'm going to go back to this section on the 14th of August at 7:30. I'm going to see what it would look like the other way round. Now when I put this on the up move, you can see that we didn't have a signal at 5:30. We didn't know that was an hourly order block, and we wouldn't have known that because it hadn't actually formed. If we go down to the 1 hour time frame, you would have seen that that formed a little doji candle. Again, you would have known it was an order block. So we can't cheat by saying that we would have known that, but at that point we would have seen this little down candle followed by an up bar. So let's go back to the 15-minute chart and we can just find out exactly when that formed. Well, that formed at 6 o'clock in the morning, and lucky to say I wasn't up, but if I was, I would have been looking at this indicator. So 6 o'clock in the morning, so we must draw this line across here at 6 o'clock in the morning, and at that point we still wouldn't have known that this was a up signal, except we've got a green arrow. So we've got to push up out of that block, and then we get a green arrow, and that green arrow comes in on that candle, which is 8:45 if I'm reading that correctly. So at 8:45 we would have had a first confirmation that we should be looking for buy trades. And so I'm going to move this along to 8:45, keep going, and we come to 8:45. So this is quite nice because it allows us to actually show how this would have been traded in real time. So 8:45 is here, and you can see that we get our first arrow. So we've got the ability to buy this market. We can buy it here, we can buy it here. Now, want to be careful, if we're getting red histograms, we should be aware that we shouldn't be following this trend. We should be getting out of our trades. So your first trade would have been here, and the red histogram was up here. You wouldn't necessarily have taken that trade, so we'll scratch that one, say you just took that trade. So that's 100 pips up to that point there, and you've got the red marker to tell you be careful. Now, what you're not looking for is you're not looking for sell trades. Why? Because the 15-minute is going up, and so we only want to go in the direction of the 15-minute on the 1 minute. So here we had a buy signal, so we would have been looking to buy on the indicator when it touched the indicator, but still I'd be a little bit cautious because we had red histograms up here. So I might have just sat out there and just waited, because the red histograms say an extreme is reached. So what I would look for is I would look for the lower histogram to go down into the extreme level. You can see this one here just at the dotted line, that this was saying this is an extreme. So once you've got an extreme, then we can start trading again. So here we get the up arrow, and let's see, do we get any touches? Well, we only get a touch here, but also that's a touch at a extreme level, so I wouldn't necessarily have taken that one. So we just have to be patient, because you're not going to get trades all the time that have nice strong trends. So if I just scroll that until we get a red bar down to tell us that an extreme has been reached, you could also have traded that because it's nearly on the dotted line. But even if you've missed that one, you had that one. So again, we're looking to go long and long only. So you would have entered a buy trade after the extreme. You see the green arrows printed, you would have gone long there. Now if you're just after a scalp, that would have been a very nice scalp. You would have scalped into that half wick, or you might have gone for the whole wick, and that's 40 points there. Here you would have been doing nothing. Here you would have been looking to buy again. You had some bars to the downside telling you that this market's recharged. This one also told you that the market had recharged here. We did get this one, but didn't really look like the market moved very far. So you have to be a little bit careful with the red histogram bars. They're an indicator. It means that possibly the market has gone to an extreme, not that it's definitely gone to extreme. So we would have been still looking for a buy trade here, and we would have been buying off our up sloping line. So you might have got a trade in there, you might have got one in there. Beware that we're coming into a red area, so you wouldn't necessarily be wanting to take a trade when you see these red candles, because you might have a pullback. So if we look, if you've got in there, you would have been getting out here about 55 points. This one would have been a buy as well, might have got out at that half wick, because of course you would have been expecting this market to reverse. So that's another 44 points. Now we're approaching the order block there at 438265, so I'm going to put a line on there. 438265, 438265, and at that point there you should be a little bit careful, because you're running into an hourly order block, so you might get a reversal. Of course you might not. So still we got the red bars to the upside, so here you would be saying, I'm not going to ride that trend because it's possible that it might be coming to the downside. I want it to recharge. Now we haven't really recharged here. We pushed down, but I'm looking for a bigger recharge. So we've still got up bars, still not got. This is the first recharge here that I would actually take, because it's almost touched the line. So I'd be looking for longs on this candle here. We get a green arrow to the upside, we would be buying the line itself. So you would have been buying here, you would have been buying here, watching out for a red bar to the upside. First red bar to the upside, you would have been straight away out, and that would have been up there, you would have been out. So you would have had 36 pips times 2, and then you would have been sitting on your paws doing nothing. So the histogram, when you've configured it to show the up bars, the extreme bars in red, and the other bars which come down to the 60 level, 60 extreme, then it will save you from going long when you're too far up the curve. And that means that you can see those red bars, you can say, okay, I see the red bars, I know the market might be in extreme, and I'm getting out. So that's how you can use the extreme meter together with the direction meter, and you always use the higher time frame. So that's how you scalp, and you can happily spend many hours a day scalping 30-40 points out of gold using this method. I think it's pretty solid. You're looking for the start of a trend on the 15-minute. You want the indicator to show a green arrow or a red arrow, and then you want to use the 1-minute chart to actually trade only in the direction of the 15-minute. Well, I hope you enjoyed this video, and I'll be developing this indicator in more detail over the weekend.